Everybody, it's Shannon from alphatrends.net. Today's Friday, the 3rd of April, 2020. We had more selling this week. Biotechs were the exception, and of course, oil surged. Bonds were higher, and of course, when oil is higher like that, you're going to see the oil stocks gain some ground as well. They're still down 50% year to date, so it's really not a lot to get excited about. Let's take a look at the charts. S&P 500 measured by the SPY. You can see I've got a 20, 50, and 200-day moving average on here, and we're unable to close above that declining 20-day moving average. Going over to the 30-minute time frame, this is what I've been showing all week on Twitter. If you're not following me, it's at Twitter, at Alpha Trends rather, over on Twitter. The volume-weighted average price from this gap lower initially held as support early on, and then this week we saw it hold as resistance. Now what we're seeing is the volume-weighted average price from the March 23rd low is really getting hit over and over again, and that occurs while we're below this declining orange 5-day moving average, and there's your week-to-date volume-weighted average price. For next week, we're going to have to get above and hold above 253 and a half-ish or so for this market to be considered, back to more neutral. Right now, it's quite vulnerable, and breaking down below these lows could send it for another fearful decline. So be very careful in this environment. The odds do not favor the long side. We're in an overall bear market. So looking at the Nasdaq, kind of the same story, of course. We've got the volume-weighted average price from that same low. We got a little bit beyond that, but the week-to-date volume-weighted average price, we're still below. We're below declining 5-day moving average, and the volume-weighted average price from the day it made the low is still below us. Breaking below and holding below this level right here, that should likely lead to a quick, fearful decline. If instead it drops below there and then rallies back up quickly, it might end up being a trap. It's not just breaking down that matters, it's the subsequent action. So if you're going to take a short sale, you take it as a short sale, you would want to either set your stop up above this high from today, or maybe even from the late day high. It's up to you to decide, based on whatever your time frame is. The Russell 2000 remains the weakest of all these markets. Here's the volume-weighted average price from the low that it made, and you can see we're well below that. And even if we take a look at the Fibonacci off of the lows, you can see we've gone beyond. We're right at a 61.8% retracement of that bounce that we've seen in the Russell 2000. So this is clearly the worst group. Semiconductors, not really giving us a lot of hope here either. If we break below the volume-weighted average price from the low and hold below it, then we most likely have issues. We have a declining 5-day moving average, and we have this pattern here of this high, a lower high, and yet another lower low. So lower high rather. So if we were to break down, a worst-case stop would go up above here. And then again, if we were to break down, what we want to see happen if we're looking for the short side of the trade is that, let me just move this over so I can draw better, and it's not letting me, I'm not grabbing it properly, I guess. Anyways, what we would be looking for is kind of similar to what we spoke about with with this volume-weighted average price, is that it tests it, it starts to flatten out and turn lower, then acts as resistance. If that's to happen in the semiconductors, then we're likely to see a lot more weakness in there. Financials are also, a relative underperformer here. You can see how they're getting trapped below that volume-weighted average price from the lows that we've seen here recently. So, this one is guilty till proven innocent. In order for it to become more neutral, it's going to have to get back above and hold above 20 and a quarter. Otherwise, it just looks terrible. I don't know if you caught the chart summit last week. I am putting the recording of that along with this video on alphatrends.net. In that, I had mentioned 4 different stocks that I was looking at as potential candidates. This was last Saturday. And I was talking about shorting AYX if it got below here with a stop above this level. Well, the stop was triggered before an entry, so that invalidated the trade. The stock did end up dropping, but it was not something I traded because I don't like to chase these gaps. If you were to have been involved, the proper place to have shorted would have been not on the gap, that, but after it breaks back down below that volume weighted average price with a stop up there. Let's take a look at one that did trigger for us, and this was really a nice one. This is shares of BILL. I had mentioned this is a short below $39.70 per share, and you can see that that occurred right at this level here on Monday morning, and the original stop was right above this level. What we did on that very first day was to cover a third of it with a gain of 75 cents. We then covered another third with a gain of $4.94, and we have 1/3 left with a stop right now at 32.45. So it dropped from 39.70 to a low into, down 12 points. Big percentage drop right there, and it never went against us. I had also mentioned Amazon as a potential long candidate above 1956.50, $1,956.50 above here. Well, we had purchased it, took a third off with a gain of $23 and then per share, and then was stopped out of the balance with a loss of $17 per share over on this day. So overall, we gained $23 once, we lost $17 twice. On average, that means we lost $3.60 per share on Amazon, or 0.2%. The other stock was SDGR as a long candidate. I had outlined why I thought this one was looking good, and you can see right here above this level. That's where we purchased it at $42.85. That same day, Alpha Trend subscribers, I suggested selling a third for a gain of $1. Then we sold another third for a gain of $2.40. And finally, the balance was stopped out at $42.75 for a loss of 10 cents per share. So on average, we made $1.11 per share, or 2.6%. So two trades triggered, three trades triggered, two long, one short. The short was the big winner, a small loss in Amazon, and a decent winner in SDGR. That's the type of analysis I provide for subscribers every single day. That'll do it for me. Have a good weekend.